Hi there. If you can believe, MULN can go to the moon. As you can see, the market cap is about 41 million. And MULN has over 200 million in cash. So the stock price is traded below the cash on hand. That's amazing. Moreover, MULN has over 90 million in property and equipment. And their total assets are over 500 million. So as you can see, the market cap is under 50 million. So the current price, the stock price seems quite cheap. You can easily have 5x or even more. Now don't rush. When you invest, you also have to see the risk and the reward. The upside can be quite huge, but as you can see, the performance of the stock price wasn't that great. A decline over 90% from its peak. And that's why you have to focus on the risk first and then on the reward. Because the stock price may go up a lot, as it happened in the past. So in this video, you'll find out the reward and risk for MULN. Let's begin. First, you might know that MULN is planning to deliver over 300 vehicles to Randy Marion, a dealership from the US. For 2023, they expect to deliver 150 electric trucks and 300 vans. And for 2024, they expect over 800 trucks and about 5,000 electric vans. So it seems that MULN is on the wave. Now, MULN expects the production and delivery of those vehicles in the fourth quarter of 2023. So at the end of the year, they expect to deliver some vehicles to Randy Marion. This is a good news for MULN because they are currently selling no products. As you can see, if you look at their past history, the revenue was almost zero. They had some revenue from services, and their losses were with minus. For 2022, they had a huge loss, over 700 million. Now, if they can attract more clients to sign new contracts, then these numbers may be higher. Of course, if you do the math for the current expected deliveries, you will find out that the revenue won't be that high. For instance, let's say that one van costs about 30,000 and one truck about 50,000. So you do the math for the expected deliveries and you will see that the total revenue will be around 16 million for 2023 and over 200 million for 2024. So these expected deliveries won't increase the revenue that much. Of course, compared to their past, when they had zero in revenue, that will be a huge increase. And of course, the stock price will follow. Plus, if they sign new contracts, then the revenue may be even higher. So this is the first catalyst for MULN, which will increase the revenue. Now, the second one is their cash on hand, which is over 200 million. And the total assets are over 500 million. And as I said, the market cap is about 51 million. So the stock price compared to their assets, especially their cash on hand, is quite low. And the total liabilities are about 200 million. So they are doing well for the moment. They have some cash to fund their operations. Now, why the stock price is traded below the cash on hand? Well, as you probably know, MULN is in the developing stage. They are currently selling no products, they only offer some services, and they expect to deliver some vehicles by the end of this year and next year, which will bring over 200 million revenue. But if you look at their losses, they are quite huge. For instance, for the last quarter, their loss was over 300 million. And for the 9 months, the losses were over 700 million. So even though they have over 200 million cash and the market cap is 41 million, the stock price seems cheap, but because of their high expenses, over 700 million, this investment right now is quite risky. Because as you can see, the revenue was quite small, around 60,000, but the losses were over 700 million. So this cash on hand will be used for their expenses, and especially for their production, if there will be something left. Plus, besides these high expenses, there are other risks. As you can see, the stock price must be traded around $1 or more, so that MULN can be listed on Nasdaq. If the stock price is traded below $1, MULN will get a notice from Nasdaq, and they have to comply with their rules, so that MULN can be traded on Nasdaq. If the stock price stays below $1, then MULN may be delisted. Of course, Nasdaq will give them more time to comply with this rule. But we have to be aware of this risk. And the next risk is dilution. This huge dilution. As you can see, the number of shares was around 7.9 million at the beginning of this year, 2023, but now the number of shares is over 180 million. So this is huge. And that's why the stock price has declined so much, over 90%, almost 100% year to date, because MULN has continued to issue a lot of shares. And if you want to invest in this company now and they keep issuing more shares, your value decreases over time. It's like you own 50% of this company, but if they double the number of shares, your ownership will decrease by half. That means after dilution, you'll own 25% of this company. And that's bad for you. MULN will continue to issue more shares because they will need a lot of money to fund their production and future expansion, if they can. Because right now the market cap is around 41 million. So if they issue more shares, let's say they double again the number of shares, they won't be able to raise a lot of money because the market cap is quite small. They may take on more debt, but we have to be aware, after they burn all their cash and they will have huge losses, they won't be able to continue. And MULN can go bankrupt anytime. So right now they have some cash to survive, but not for a long time. That's why you have to be aware of the risk, because their losses are quite huge and there is the risk of further dilution. So to conclude, MULN may go to the moon, but I'm not sure if they will come back alive. That's why you have to focus on the risks first. Don't focus only on the upside, because the stock price can decline a lot. Or even worse, this company, MULN, can go bankrupt. And if you have any questions, please let me know in the comments.